Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra. Well, the IPO rush is continuously on the Dalal Street, and there is a new IPO that hits the street today. And I'm talking about Juniper Hotels. This is the largest owner of Hyatt affiliated hotels, and this has debuted today with an 1,800 crore rupees initial public offering. The luxury hotel development and ownership company Juniper Hotels has set the price band for its IPO from 342 rupees to 360 rupees per equity share. Remember, as a retail investor, you will get a lot size which is of 40 shares, and then in multiples of 40 shares is what you can apply for in this IPO. Now, Juniper Hotels has reserved not less than 75% of the shares for the qualified institutional buyers, or the QIB portion. 15% is reserved for the non-institutional investors, and 10% is reserved for the retail portion. So within this 10% band is what you will invest in or apply for in case you're applying within the retail category. Now, what does the company plan to do with the fresh issue? The company plans to utilize the net proceeds of the issue for general corporate purposes, full or partial debt repayment, or redemption of certain outstanding borrowings that have been incurred by the company and the recent acquisitions like Chartered Hotels Private Limited and Chartered Humpy Hotels Private Limited as well. Now, remember that Juniper Hotels operates in luxury, upscale and upscale category of hotels across various locations in India, including Mumbai, Delhi, Ahmedabad, Lucknow, Raipur and also Hampi. Juniper Hotels, which is a luxury hotel developer, has, however, reported losses over the past 3 financial years. So in case you've been looking at the key financials of the company, you will find that the company in the first 6 months of FY24 also had reported losses. In the last 3 fiscal years had also reported losses. These losses have been attributed to the burden of borrowing and associated interest payments that have weighed down on the company's earnings. However, once the loans are prepaid, there is going to be a significant interest savings, and that is expected to reflect positively on the company's bottom line as well. Now, the company has the highest net borrowings to equity ratio among the listed peers. Even the debt-free companies like Indian Hotels and EIH, along with Chalet Hotels, which operates on an asset-heavy model, have relatively a lower debt-to-equity ratio. To address this, the company is raising this 1,800 crores via completely fresh issue. Of this, 1,500 crores will be earmarked for debt reduction only. The company's debt currently stands at 2,210 crores, including the 300 crore rupees in the promoter loans from overseas ownership companies. Now, the company aims to achieve a leveraging level of less than 1 time in FY25. Now, despite the highest level of borrowings, the good part is that the company has achieved higher operational income per room than the industry standards. And this is attributed to a diversified revenue stream and also active asset management, which have contributed to increased efficiencies for the company. Juniper's room revenue is projected to align with the industry standards going forward from here. Currently, the company derives 45% of the revenue from rooms, with F&B close behind, and Juniper alongside Chalet Hotels record similar revenue contributions from the F&B segment. However, Indian Hotels and EIH have the highest share from this segment, standing at 37% as of FY23. Now, the company boasts of an occupancy rate of 76%, surpassing that of the peers including Chalet Hotels, EIH, Indian Hotels as well. However, the management now anticipates the rate to stabilize at around 80% as far as occupancy is concerned. Now, what has been raised as a key risk by most of the brokerage houses? Both the company and the subsidiary have encountered previous losses, and they might necessitate future funding for their ongoing operations. This is considered as the #1 risk for all those investors looking to invest in this IPO. Now, ahead of the IPO, the company has already allocated 2.2 crore equity shares at 360 rupees per piece, garnering 810 crores from several anchor investors. Now, as far as the brokerage houses reports are concerned, Hensec Securities has said that the company is in a unique partnership between asset owner and operator brand backed by advantage. Expertise in the site selection and identifying opportunities to develop their hotels is also a big positive. Also, the company is well positioned to benefit from the industry trends, robust asset management capabilities with a focus on enhancing operating efficiency and profitability, and therefore brokerage house has indicated a neutral rating to this issue as well. But do speak to your own financial advisor before taking a bet on this one. This IPO will be open for 3 days starting today, and you will get an opportunity to bid on either of these days as well. With that, we wrap up this special trade, but do stay tuned as a whole lot of news coverage continues on the other side from the world of business and stock markets.